Welcome back to Market Hour, everybody. I'm Kevin Hincks. Joining us now on set is founder and chief strategist at Path Trading Partners, Bob Iaccino. Welcome to the show, Bob.
Good to be here.
I have a question for you.
Yeah.
With everything we've seen today in this market, and looking forward in the calendar to next week where it's kind of light on data, big data this week, kind of light next week, what can get in the way of this market running for 5, 6 straight trading days?
All right, to try and avoid the political.
Yeah.
That's what can get in the way.
Absolutely. You got to get through a weekend that could be some geopolitical risk.
And we've got the G7, which some people are now calling the G6 because of just the chilly reception that the U.S. is getting. We've got talks with Commerce Secretary Wilbur Ross is in Beijing.
Yep.
We just had the number 2 from North Korea leave the White House.
Right.
So all of that stuff is swirling around what is clearly an extremely hot economy relative to the last 7 or 8 years. Maybe still not relative to recent recoveries. And it still bothers me that we're calling this a recovery, by the way, as opposed to an expansion. A lot of people still call it a recovery.
We've gone way past recovery.
Yeah. So when you look at the kind of jobs number, I mean, you guys have both been around almost as long as me. When you've got a 238,000 number, that never used to be a blowout number, but this was a blowout number in every aspect. It's tough to find anything negative. So what can get in the way is more trade tensions, more negative things. That is away from political opinions about what tariff should be where, if any tariff should exist at all.
Right.
If they don't make progress, that'll slow the bull.
Yeah. So the way that I look at it, Bob, you're seeing a classic risk on trade going on with equities up, treasuries down. Do you see the treasuries, that benchmark 10-year yield getting back up to that 3% level over the next maybe 5 trading days?
Yeah, I've said this before on several of appearances, both with you and with Oliver. I think 325 by the end of 2018 is still a thing. I just think right now 3% is not scary.
Yeah.
We've blown through 3% a couple of times. We've sat above it.
It's no longer a big hurdle.
Right. The market recovered while we were above 3% and started to slowly move higher again. I think people are starting to realize that once it's been breached, it is not that scary of a overall level for 10-year yields.
We are about 12 days away from a Fed meeting, right? Pretty high percentage that they're going to raise rates. I'd call it pretty much a lock as we go into June. That said, you know, if I keep asking everyone this because I love where this takes the conversation. If it's 3 or 4, right, which are they skipping? Right? Remember, the last 2 or 3 Decembers, it's always been that. Why are the percentages low in December when they always raise in December? Isn't it September? Aren't they getting this wrong? If they're going to skip one, it's going to be September.
Well, we've talked about this before. Generally, they've been able to cut rates in December without any sort of tension. Raising rates has been kind of a thing. To me, I still think we're more likely to have 2 rate hikes for 2018 than 4.
So okay.
I think we're likely to.
Oh, so you're not even talking about a third?
No. Well, I think there's going to be a third.
Right.
But if we're going to go 3 or 4 or 2 or 3, I think we lean more 2 or 3. And actually, the CME Fed Watch tool had gone against me
it had.
right around May 22nd or so, when the probability of the 25 basis point rate hike dropped from 100% to 95% based on the Fed funds futures. And now that's flipped. Yesterday, we were at about an 87% probability of 25 basis point, with the remainder for nothing. This morning, after the non-farm numbers, 93.8%, which I agree, above 92% is a lock.
Now, those are great points, but what I want to look at now is crude. Now, we've got crude in that $65 a barrel handle. Gasoline prices are coming down very slowly, as we always typically see that. But what do you see out of oil over the next maybe 2 weeks into that OPEC meeting that we've got coming up in about a week and a half?
Yeah, the OPEC meeting in Vienna is the biggest thing sort of on the horizon. The issue we have now, the thing I'm watching the most, is the Brent WTI spread, which blasted above 12 yesterday. That would have been the highest level since about 2013. At this much of a level, it causes a problem for shale. Today we have the 3rd of 4 weeks of double-digit rig count growth. We had 11 today added. That's the 3rd of 4 weeks for double digits. But if you take an example like the Permian Basin, which is the only one I have off the top of my head, 300,000 barrels of increased production out of the Permian, 3 million barrels a day now. They only have transport capacity for 3.16 million barrels.
Yeah, I've heard they're running into issues there.
Right. Bottlenecks, right?
Yeah, from pipelines and rail cars.
Have helped that out.
Yeah, but you're at pipeline and rail car bottleneck now. Trucking is the next option, which is ridiculously expensive.
Right.
The Brent WTI spread has to get into the $18, $20 range for that to be a thing. takes 2 years to build a rail car, longer with regulatory approval to build a pipeline.
Right.
So I think OPEC's kind of got everything where they want it.
Yeah, I mean, this is an oil trade. We thought this might happen, right? Everyone that trades oil or watches oil was
speculated
watching
on
this
that a little
thinking
bit, yeah.
mid-60s by maybe the end of the summer.
Yep.
We didn't think it'd be May.
No, I mean, it was quick. And, you know, Khalid al-Fahil,
Right.
the Saudi energy minister, denied that they've spoken about a production.
Yeah, no
So
official
he denied
announcement
it,
has been made, right?
Right.
He said we have to talk about it in order to actually do it.
Yeah.
And he says they haven't. If you remember when they did the production cut, first they agreed to agree on an amount later. I think that's what's going to happen in a month as well. Because they're
Absolutely.
getting what they want out of this.
Okay.
Yeah, it's been an amazing couple days in the crude oil market, amazing couple days in the bond market. I mean, if you're a futures trader or trading curvature in these markets, you are just ripping.
Yeah,
right
if you're
now.
looking for a reason to hedge.
And I'm surprised, and maybe you have a point on this. I'm surprised that gold's not down even more today, based on the fact that dollar's up.
Dollar's
a little
strong,
bit, and
gold hanging in there,
you're
though.
seeing that
Now,
risk on traded equities.
Tom, it's broke late in the day now. It's down $8.
Yeah.
It was strong all morning.
Yeah,
It was hanging
still
in
not
there.
down a full percent. I would have expected
Sure.
down a full percent today.
Yeah, I agree. I don't understand what of the geopolitical bid, which is all really gold has to hang on to now, is still in there. It must be, to me, a potential breakdown of the talks. You know, we've still got, or the talks with North Korea, we've still got 11 days.
Right.
So they can go in either direction.
Right.
No, none of these trades are, as we say, in the warehouse just yet. They got a long way to go. It's still, you got to think the trend is up, but make no mistake that there are a lot of hurdles to get over before this market gets to next Friday and has another good week.
Right.
All right, thank you very much, guys. Coming up next, thank you to Bob Iaccino, founder and chief strategist at Path Trading Partners. Thanks for joining us on set today.